Alright, so is it Tuesday? Is it Thursday? It's Thursday, isn't it? Oh shit, okay. Yeah, so Thursday today, and we are in two trades long currently. It is 12:45 New York time or 5:45 UK time. I've been in these trades for, well, since pretty much the start of the AM session, targeting previous daily highs, overall bias, bullish to come up here eventually. And to be honest, the markets have shown promise, and they've also done a lot of slow chopping about today. So, you know, it's one of those. We just see how the news at 7:45 comes in. It's Canadian news. BOC Governor Macklem speaks, and yeah, I'm not sure how much of an impact that will have on the markets, but you know, I'll get into why I've taken these trades. The first one I was looking at was the Nasdaq one. So if we put the previous daily high and low, had alerts set on my phone. So this previous daily high up here, previous daily low is pretty much this red line here where we swept liquidity, and you know, this happened just before AM session. And yeah, as we come into the trade, we got this 5-minute inverse fair value gap here and market structure shift here. On a 15-minute chart, that looks like this, so you could take that as a 15-minute inverse as well. And then I went for, I think it was a 3-minute fair value gap entry here, but I got in here just because I was thinking that, you know, this wick down here was enough to indicate an entry. As you can see, price gone up, down, up, down, up, down. Sort of just sat around our entry most of the day. And yeah, so let's have a look now. Got my break-even point up here. I did have it up here originally, and then this 15-minute candle, this was like 10 o'clock. We had a little reversal here. I was thinking, you know what, this is just going to come and fill this imbalance here. So we've moved the stop back down below the inverse fair value gap in line with the model. And yeah, I'm thinking, to be honest thoughts right now are, you know, we've got a bit of SMT here, hit this order block, trading down a bit. But, you know, we're going to stick with it, just hold, because I know some of these trades can turn into more of a swing trade, where they'll just sort of, you know, fluff about for a bit and then, you know, take profit the next day. So that's why I've kept my inverse fair value gap stop as it is, just so we have some room to breathe. We've obviously got this big imbalance up here. We've got an inverse fair value gap here on the 15. But yeah, so on an hourly, we're looking like this right now. We also traded into this hourly imbalance here on in the hard time frame. The 4-hour, that looks like this here, and then we've got these candles here. We do have this down here, which I'm thinking is a possibility. You know, price does come down a bit, fills us in, stops us out, but at the same time, you know, we've got 1, 2, 3. This wick here is a sweep of this, so that's also another thing to take into consideration. But ultimately, looking at this up here is the higher time frame draw, same as S&P is a bit higher up, but you know, yeah, we've traded down into this higher time frame inverse fair value gap. I think it's on a weekly chart. Yeah, weekly inverse. So yeah, we're looking for this to hold bullish pretty much. As you can see on the hourly, it's a lot of consolidation today. But yeah, it's one of those. Just got to be patient with this one. I have to remember that I'm so used to back testing on FX replay that you can just skip through the sessions and, you know, get everything done. You can skip through a trade in like 2 minutes. like less than that. So yeah, we just have to wait and see how it plays out. And yeah, the reason I entered long on both of these is because we also had on the S&P, we had the 5-minute inverse, and then we had 15-minute inverse here with what was it, 3-minute? It was pretty much price had come down here, and you got this fair value gap on the 5-minute here. Oh, okay, maybe not. Let's drag this across. So we got a market structure shift, 1, 2, 3, retrace into this fair value gap. You could take that as an entry, but because the risk to reward was just a lot better on the S&P, because I can do more units on it, obviously, because it's one less digit along here, you can control it a bit. So you can see I've got 4.63 to 1 risk to reward here, and a lot less risk, whereas on here I've got 2.09 risk to reward for 117, 250, and yeah, interesting watching this play out at the moment, really. We are, what are they now, 12:50, so lunchtime retracements are often expected. Hopefully get a nice little move up here. I'm looking for, well, basically just this candle being traded back up to be my break-even point, and this wick here. So we have traded above it already, but just got to see how that plays out. And then on S&P, break-even at this candle's high. I feel that would be a nice little spot to do it. We've already had our pullback earlier during the day into the inverse. The higher time frame inverses, with the lower time frame inverses acting as the stop. So yeah, we've got at the moment total 117 plus 64. That's one. Oh, the maths is not good right now. I've been cooked at work all day. 117 plus 60 is 177 plus 4 is 181 pounds at risk to make 296 plus 250, so basically 544 pounds profit. So it's not bad overall. Obviously once we see price come back up here, it'll be risk free, and then I'll be looking to take some of the position off as we trade a bit higher up into these fair value gaps over here. Mainly this one looking to be, well, I'll close maybe like 75% of the trade and then just let the rest run. That is granted that price does that. So it's one of those, even if a set of forms, price doesn't have to do anything. It's all game probability. And I took this in line with the model, so we're following the model. And yeah, just got to stay with it pretty much. So yeah, I think that's the main point I want to talk about today. Be watching this during the PM session just to see if we get a continuation up. And yeah, so tomorrow, news wise, core retail sales and retail sales in Canada, so that's something there. But yeah, other than that, unemployment claims came in better than expected, and flash manufacturing PMI, which is actual greater than forecast, good for currency. So you can see both of these came in better than forecast, but ultimately it doesn't matter too much what the result is. It's normally the news driver itself that triggers the price to move towards liquidity. Yeah, on a 15-minute, we got a nice push up here. But it's one of those, price has literally just been chopping and chopping and chopping around the entry for a while. It's really consolidating, as you can see, compared to yesterday's move where, you know, we got a nice break up. And, yeah, it's one of them. Dependent on how we move down here, you know, we got 1, 2, 3 points of liquidity there. This is perfectly matched here with the wicks, but there is this down here. So, accepted the risk, do you know what I mean? Just got to see how it turns out in the longer run. And with that being said, that's going to cover it for today. I'm not going to trade tomorrow. I'm just going to, if I'm still in this trade, then obviously I'll still be in this trade, but I'm not going to place any new trades. You know, unless the setup forms massively clearly. The reason I say that is because on my FX replay, the last few that I've had, I think the last 3 trades I've taken have all been on Fridays on here. So, yeah, it's one of them. Well, when this loads, probably won't. Yeah, anyway, yeah, we just got to see how price moves now, and as you can see, we've come into drawdown a little bit. So, here's what it is. We'll continue to monitor this and be back tomorrow.